Good afternoon. This is Chris Brecher with the Chart Patterns Mastery / Simpler Trading free video from March 25th, 2025. Just a short video to show you what's setting up in the markets. So what we're seeing right now is this. We're seeing that the S&P futures and the NASDAQ futures are both rallying from an oversold condition. Like I said, I'm not worrying about the 200 moving average. I put this also on StockTwits because a rising moving average just doesn't mean anything. So in history, when this is rising, it just doesn't matter if it reclaims it or not. Now, if it stays under it, then and this rolls over, it becomes great resistance. You'll see it in the bond market. There you go. Great resistance. But on the way up, it just doesn't matter. You'll see it all the way here. It's rising up, it doesn't matter. On the way down, the first couple of pops, yeah, it works great. So right now, that doesn't matter. What matters to me is the 50 moving average. So you're going to see in here, when you look at the 50 moving average and the overbought, you're going to see you're sort of stuck in a zone where you're not sure what to do. That's why you saw a lot of choppiness today. So are there tells? Well, number one, I want to go over what the objectives are. We already know on the bottom you're overbought. You can stay overbought. You're looking for the reversal pattern around this area. But let's take off a lot of things and show you what we're talking about. So number one, I'm going to take off the ATR trailing stop. I'm going to take off the 200. Just going to show you the 50 moving average. The NASDAQ, I'm already only showing the 50 moving average. So we're going to show three different areas that could be resistance. Number one is going to be that 50 moving average. Number two is going to be the actual breakdown point. Number three is going to be that little area of congestion here before it had the next leg down. That's where it is. And then the last one, because so many watch it, the 50% retracement. The 50% retracement is 58.41. We're at 58.29. The breakdown is in this zone. Maybe it overshoots a little. Now, you might say, yeah, but this is that futures where they have that rollover gap where it went from March to June, so it gapped up. Sure, we could take the SPX instead. So we're going to take off the bottom, and I'll show you. What I'm looking at is this, and the Fibonacci retracement. There you go. So you got the 0.5 is 58.15. You have the moving averages around 5,900. And you have that trend line breakdown, which is about 58.60. That's the problem with going in right now and like just pedal to the metal going short, because you don't have the expectation met. Plus, you don't have any reversal candle. I can't stress enough that when you do hit resistance, you look for the reversal patterns. I'm going to take off these drawings. I'll show you what we're talking about. The Russell 200. So when the 200's curling down or flat, it's good resistance. What do you notice? You had to play the reversal candle. You don't have that yet. So right now you're sort of stuck in a zone. You can look for some bullish patterns, some bearish patterns, and that's where you are at the moment. But I want to show you two warning signs, and I'll leave you with this. So the two warning signs are this. I mean, obviously you're overbought. Obviously you're getting near resistance. Well, here's a couple of other warning signs. One of them is the VIX. The VIX and its Bollinger Band. This isn't cut and dry. It's not perfect whatsoever. But what it does show you is that when the VIX is at its lower Bollinger Band, where it's close to, it's a possible warning sign. It's starting to show some complacency. But you've seen before that can happen and it stays hugging it. Or it stays hugging it on the way up. But it is, when you're talking about the MACD is getting overbought, you're near a resistance area anyway, and this is at the lower, you're starting to get a number of warning signs. But this is the biggest warning sign I see at the moment. And that is the Russell. What we're talking about in here is that in 2023, The Russell brought everything down. The Russell was well under the 200 like it is now. The ES was over it. The Russell, when it had its second leg down in 2023, right here, that second leg down, the ES was consolidating. It was consolidating under the 50 moving average, and you weren't sure which way it was going to go yet. So when this broke down on the left, because the Russell is what pulled this down on the right in the first place, when this had its next leg down, this triangle on the right was more likely to break down. Now, why am I showing you that? Because of what happened today. The Russell closed near its low for the day, while the S&P closed near its high. So you're starting to get that divergence. If I see the Russell tomorrow all the way down to here, then I think the chances are this trend line I'm showing on the upper right is more likely to break down than up. That's what I'll be watching tomorrow. Have a great night. Thanks for listening. Talk to you later. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.